Good morning, good morning. Testing, testing, 1, 2, 3. Should be good. How are we all doing? Are we all good? Wait for some more people to join. I got 12 people watching. Just going to put the link on the socials. So it is Wednesday, I think. Wednesday the 24th. Halfway through the week. Expectations remain low, as I mentioned yesterday. If you weren't here yesterday, please go through or go back to yesterday's trade live stream. I break down quite extensively why I'm pretty much why I have pretty much low expectations until like the 6th, pretty much the second week of October. Just based on seasonality and based on I guess calendar structure, right? Monthly ATRs were met yesterday, and with that we came to 25k, 25k and pretty much 26 points, 27 points. You had your congestion at those highs, consolidation, and then you did finally break down. You had your base drop, and you have tried to find some support, which will break down, which is pretty much just from what would be last Friday's highs. And that's pretty much where we've come down to yesterday. So the overnight session, we've obviously been slowly grinding higher, and I'll break that down in a second in terms of what I'm looking for. But if you weren't here on yesterday's stream, if you're watching this on YouTube, obviously highly recommend you to join the Whoop channel, even if it's just on the $7 for 7 days. That won't give you live streaming access, but it'll get you at least get you into the room so you can see what we do each day. But most of you are probably already in the room anyway. So breaking down yesterday, if you weren't here, we did mention the reason, again, why I'm not expecting too much going into the next couple of weeks is purely on the higher time frame. This range here, which is what we've spoke about yesterday, this whole range, just get rid of the indicator just so you can keep this fairly straightforward. This whole range, 1,828 points, is what would be and what has transpired for the last, it doesn't really matter, you could say 100 months, right? 10 to 100 months. Pretty much on average for the past 10 years, we don't really exceed 109% of the monthly ATR, the monthly range. And that level is where that would be. So 25,095 is pretty much where that monthly range would be. Now, can we exceed that? Can we get above that? We can, but again, over the past 10 years on average, we don't. So it kind of makes sense to trade carefully in those areas. Does it make sense to potentially take a short? If that meets your trading plan or trading criteria, maybe look at that. But for me, I don't short uptrends. I wait for pullbacks and buy long on those pullbacks. So, and especially when the weekly and the monthlies are still green and there is buying momentum. So someone asked me yesterday in the trading room about a market crash. I don't ever question myself about market crashes when we are still bullish on the daily and the weekly. Once the daily and the weekly turn bearish, then you can start asking yourself if you're going to get a market crash. But it's not a question that ever enters my mind, just because the market will show you, the chart will show you what is happening, so you don't have to ask those questions. For me, anyway, that's why. So again, dailies are going to be bullish until proven otherwise. Once that flips red, we can start anticipating potential short sequences. Again, the weeklies are green and have been green ever since April this year, both on the NQ and the ES. Again, when it's red, trade the shorts, right? You had weeks of consolidation before we had the drop. You don't have to be worrying about, can I get into the short? Am I going to miss a big drop? No, you had countless weeks, nearly 15 weeks before we actually had the drop. So there was selling pressure before the drop even happened. So don't worry about missing out on a long, missing out on a short. The market's not going anywhere. You will have plenty of time to get into positions. Again, just on the NQ, for example, you had weeks, nearly 8 to 10 weeks before you actually had the drop. So don't worry about missing a move, missing a crash, missing a rally. It's just questions that you don't need to just, in my opinion, fill your brain with that information. So focus on what is in front of you, trade that, and that is all I would say on expecting any sort of crashes. You will know way before a crash sort of transpires, right? Even if you have a 10% drop in a day, you're still going to have the BXs turn red, or green, sorry. So from green to red. With that being said, again, that's your monthly ATRs. If we zoom out on the dailies just to see the extensions that we're in, obviously we've had this huge uptrend from what was a multi-year extension that comes all the way from 2022 and actually started in 2020 when we had the March COVID dip. And that's another thing that coincides with what I was trying to say yesterday. You have to have these dips for extensions and anchors to even exist. I'll say that again. You have to have dips in order for these extensions and anchors to exist. Okay, you have to. Without an extension, without a retracement, you don't have an extension, and vice versa. Inside that, we obviously had those yearly extensions that traded and have gone all the way to 100% completions. The same anchor new high of that draw has also traded when on the pullback. Again, you have to have these pullbacks down into halfway backs. You then have to see if you're going to get an entry on the smaller time frames, i.e. from a monthly to a weekly to a daily. And of course, we had that daily halfway back after trading the ATR reversal on the day and also on the week. The ATR reversal was clearly signaled. You then had several days to wait for the ATR reversal on the daily as well. You then had several days, if not weeks, to then wait for the halfway back on the daily. And of course, those completions take you all the way up into T1, T2, and eventually T3. Once those completions get traded, of course, we look for those next trades. And of course, we traded those high to highs, those same anchor new highs down here. And of course, you then go into the next aggressive extension, which did trade back in August, which was the double ATR down. ATR up, reversed halfway of that midpoint, and has completed T1 at that 23 with the negative 62 at the weekly ATR currently, which is 25,473s. Now, if I just get rid of the current draws that I have in terms of the monthly ATRs and just get rid of these extensions for now, you can see where we are. So if I just put this down to, I'm going to take these off just for a second, just so we've already completed this negative 100 here, so it's irrelevant. And this daily is already completed as well, so it's irrelevant. So the only current really draws that I'm keeping on my chart is going to be the high from what was the 19th of May. That traded its halfway back, which was on the 1st of August. And we have gone all the way to that 23. So I don't think this has yet traded a high to high. I don't class this as a valid draw simply because we didn't get above. We didn't go to and through the 23 for it to be valid. It has technically completed at 62, but again, I wouldn't have that as a valid draw. What I would have as a valid draw is the retracement back down into 663s and or 552s. Weekly ATR low is down here at 24,280s. So again, important level to keep on your chart. That is pretty much a break and retest of what would be this breakout point here. Okay, so something to keep on your chart. Again, that is the weekly ATR. So do not be surprised if we come down to 22,263s today, this week, today, maybe not today, but this week. Why? Because that is the on average weekly low of the week. So that is where price could go, just like the weekly high is 25,520s. Completely fine to go up there. The only thing going against you on that is the monthly ATR. Again, that's why you have those levels on your screen. If we go down to a smaller time frame, let's just go down to the hourly because there might be some smaller composite extensions. And what I'm going to do from there is draw the anchored VWAPs and see where we are. I drew them yesterday. I've taken them off my screen just so we can go through it again today. Again, just for those supports on that fib extension, that would bring you back down to 663s down there, just so you're aware of that. 38. That is a daily extension. If you want to refer to that slightly differently on your drawings, that is a daily extension. Okay, going from a smaller time frame point of view and following the trends up on the hourly time frame is for me what's going to be probably the most conducive, just because we're in such a large uptrend. So I'm just going to try and follow what would be the most easy draws to find on my screen on the hourly and follow those up. But firstly, I'm going to take anchored VWAPs and then try and find where the last torch has been passed. And then I can draw my fibs from that level. Okay, so of course, FOMC from Wednesday makes sense. So for me, we have come down to the support on the fibs from the overnight session, which I think Sam mentioned last night, which was 780s. So Sam, 780s, we did come down to that level. So if anyone took the long there, that's 100 points from that 780s level we mentioned yesterday. From there, I will then go down to a 13-minute time frame because I will see where the extensions lie from FOMC. I didn't trade last week, so you will just have to, you know, bear with me whilst I find the current draws that we're in and see what we have inside from FOMC. I think FOMC is going to be the most conducive just because that is where the news event happened. But from my understanding, there isn't really any extensions from that move because it was so volatile. So all I will do is go to the 13-minute and where is FOMC from there, and I will just go back to where we had a RTH halfway back, which I can see down here if this was a halfway back. Yeah, and then draw that to the same anchor new high which traded, and I will draw that again to the same anchor new high which traded on FOMC down here, which makes sense. That completed the 23. 62 is above us at 25 222s. That high to high, technically, I don't like drawing them when they come under, but that technically would bring you down to what would be again 660s. So that's a daily and a lower time frame level that lines up. So that would be double confirmation. So with that level being there, I will mark that as super strong resistance until proven otherwise. So it'll be very interesting. I'd even class that as a smart buy zone for now. Of course, we want to see other confirmation before we buy that straight away. Smart buy zone there. And in terms of a smaller time frame entry, if we don't get 660 today because the RTH or the ETH low of day is actually down here at what would be 670s. That should actually, yeah, I mean that pretty much lines up. There we go. So now we have the ETH ATR, the ETH ATR of day lining up with what would be a daily and a smaller time frame long support. So it's completely normal, and we shouldn't be confused or shocked if we do come down to 660, 670s today. Three reasons: ETH ATR of the day, and then daily and lower time frame support levels on the 38% extension. So that will remain a smart buy zone. Again, I have no idea if we're going to get down to that level. I don't need to know that. What I need to know is once we get down to that, do we trade a halfway back? Do we trade structural longs and trade the continuation up? That's all I need to know. I don't need to know anything else other than that. So since we're not there, all I need to now look for is a potential more aggressive entry if I want to trade this. So with that being said, where is my ETH trend line? Currently around 790s, which if you were on the call yesterday, 780s was that support that we spoke about. And that pretty much lines up with what would be last Thursday's highs, and also what was Monday's lows, and also yesterday's lows. So you've got a lot of break and retests of these highs becoming support. So what was the high / resistance now turning into support. So that for me, if we get a retest of that level, which is currently 800s, potentially would be a buy zone for me. That is also the anchored VWAP as well. And I believe it'd probably be, not that I would class this as technical draw, but it'd probably be a 79% fade long. Yeah, 79% fade long there at 807. So I would be looking for a potential long entry down there, as long as we can try and show at least 1 or 2 green diamonds. And if we do, I would take a long trade off that. Yeah, that's all I really have for the long side. I'm not looking at any shorts at the moment, just purely because if we go to the dailies and also the 65 minutes, the hourlies are all green apart from the SMH, which obviously will bring down some of the Qs just because of NVIDIA and other semiconductors. But currently currently NQ and the ES are both green on the hourly and also on the daily. So until these flip green, from green to red, then I will still be bullish until they obviously flip. So right now we do still have completions on the YM. The NQ has completed as far as I'm aware, yeah, and the ES has completed. So it's in a really tricky spot. Yeah, I don't think it's going to be easy trading for a while, just purely because we've completed so many of these targets. And on the weekly time frame, you can see that box that we drew many months ago. We have completed every single one of those extensions. So going to be very hard until we get a pullback, hopefully. That will be where it gets easier, just because you're at blue sky breakouts. You're at blue sky breakouts. So you just have to try and find a trade that makes sense on a support and trade it and be ruthless with the decision of the trade in terms of the outcome. So yeah, can't turn bearish until we at least flip green to red on the dailies and or the hourlies. So that is that. So yeah, we'll try and buy some pullbacks if we've got that momentum, but I will want to see support and confirmation on green diamonds for that, and hopefully some traditionals. So I think the levels remain 790s to 800s for the semi-aggressive buy, and then if we get it today, which will be tomorrow now, 660s, 670s will be that stronger support. And that could take a day of consolidation before that goes up. So I'd imagine if this is going to trade, let's say if it trades today, which it can, I believe the actual trade would be Friday to take. And that is also a news-driven day. So you could spend today and tomorrow coming into this area. News could push you up. You could get the A, the B retracement, and then the C to push back up into monthly high by Friday. Potentially, but you have to remember we've still got a week and a half left, and the range has already been met. So you could just now chop, which is what I foresee happening, and why I'm not really going to be trading much, or at least taking much risk because of that reason. So hopefully that's helpful. Again, it's going to be boring. Just accept it. It's going to be boring for a week or so. If you've got other things to do in the meantime, I would probably do them. But if you are just trading on the side whilst you're working or whatnot, stick around, watch the charts, but at the same time, just have low expectations, because yeah, I've been doing this a long time, and when I say that there's not much going to happen, yeah, it's quite meaningful. So we just have to stick around, and hopefully things will change going into Q4 October. We will have a new month, we will have a new magnitude, and we will obviously have new opportunities. So just try and stay out of trouble whilst we're in the transition going into Q4. And yeah, that's what I really have. So if there's any questions, let me know. But apart from that, guys, that's pretty much all I have. That was a long breakdown this morning, 20 minutes, just under. So hopefully that's helpful. I will see you all on YouTube tomorrow, and we will go on to Whoop now.